Thanks for joining us for the Purdue University CME Group Ag Economy Barometer August 2021 survey results. I'm Jim Mintert, Director of the Purdue Center for Commercial Agriculture, and I'm going to share with you the highlights from the August 2021 survey. The Ag Economy Barometer rose 4 points this month to a reading of 138 versus 134 a month ago, and that small rise in the barometer was attributable mostly to an improvement in the current condition index, which rose from a reading of 143 last month to a reading of 152 this month. There was also a very small increase in the index of future expectations, rising just 2 points to a reading of 132. Farmers had an improved perception of their own farm's financial situation as the Farm Financial Performance Index rose 11 points to a reading of 110 versus 99 last month. There was also a very small improvement in the Farm Capital Investment Index, rising to a reading of 53 versus 50 last month. And really all of that was attributable to an improvement in producers' plans with respect to constructing farm buildings and grain bins. For the third month in a row, we asked farmers by how much they expect farm input prices to rise over the next 12 months. And there was a market change this month. In the prior months, roughly 30% of our sample said that they expected farm input prices to rise 8% or more. This month, almost 40%, 39% of the farmers in the survey said they expect a rise in input prices of 8% or more. Farmers continue to be relatively bullish about farmland values. The short-term farmland value expectation index rose 4 points this month to a reading of 146 versus 142 and mirrored the same improvement that we saw on the long-term farmland value expectation index as well. For the fourth month in a row, we asked corn and soybean growers what they expect to see happen with respect to farmland cash runner rates in 2022 versus 2021. Roughly half of the corn and soybean growers in our survey said they expect to see farmland cash rental rates rise in 2022 compared to this year. And 3/4 of them, 77%, said they expect to see a cash rental rate rise of at least 5%, and 33%, 1/3 of them, said they expect cash rental rates to rise by 10% or more. In this month's survey, we asked a series of questions of farmers about their use of cover crops. 41% of the respondents in this month's survey said they currently use cover crops on their farm, and almost half of them, 47%, said they began planting cover crops within the last 5 years. 3 out of 10 said that they have been planting cover crops for more than 10 years, and 6 out of 10 said that they plant cover crops on 25% or less of their total farm acreage. Just 10% of cover crop users said that they planted cover crops on more than 75% of their acreage. And some of the common reasons cited for planting cover crops were to improve soil health, erosion control, and water quality. And somewhat surprisingly, 10% of cover crop users said that fulfilling the requirements of a carbon sequestration contract was one of the reasons that they were planting cover crops on their farm operation. That wraps up the results for this month's Purdue CME Group Ag Economy Barometer report. You can get the more detailed report at our website, purdue.edu/agbarometer. And you're encouraged to join us for our upcoming webinar on the corn and soybean outlook on September 13th. More details for that are available at purdue.edu/commercialag. On behalf of the Center for Commercial Agriculture, I'm Jim Mintert. Thanks for joining us.